How you doing, everybody? This is Kurt Henry at the Mortgage Center, and this is a weekly mortgage update just to let you know what's going on in the mortgage market. So in terms of mortgage rates, a 5-year fixed rate is in around 3.69% or so. A variable rate is in around 2.6%. And I also wanted to mention the Purchase Plus Improvement Program and what that is. It used to be when somebody bought a house, if they wanted to do improvements on that house, they could just wait for a few years to go by, and as the value of their house increased, they could just increase their mortgage at that time to get money to do improvements. So let's say somebody buys a $100,000 house, and they put, just for ease of numbers, and say they put $5,000 or 5% down, then their mortgage is 95% of the purchase price, which is $95,000. Now, as the value of the house increases, so say after a few years or a couple of years that the value of that house went from $100,000 to $110,000, well then people would just increase their mortgage at that time, and they used to be able to increase it up to 95% of the value at that time. So if the value is $110,000, 95% of that is $104,500. So if their mortgage it started at $95,000, but of course they would have paid some down, they could increase it up to say $104,500, and they would take that money to do improvements on their house. Now the problem is that when you increase a mortgage, you can only increase it up to 80% of the value of a house. So that house now, you can only increase the mortgage up to 80% of whatever the value is. So if their mortgage is already over 80%, they have to wait for a longer period of time for the value of the house to go up and their mortgage to come down in order to be able to access mortgage money to do improvements on a house. So that's why the Purchase Plus Improvement Program is more popular now than what it used to be. Because when you buy a house now, say you're buying that $100,000 house with 5% down, and let's say you wanted to do $10,000 of improvements, well, the bank on closing, they would finance 95% of the purchase price, which is $95,000 because the purchase price is $100,000, and then say the value or the improvements is $10,000. So the buyer would just need to get a quote for the improvements to be done, and we would need to get that quote. And so when we get the final mortgage approval, we would be looking for the bank to give us an approval for 95% of the as improved value. So even though the purchase price is $100,000, the as improved value is $110,000 because we're assuming that the $10,000 of improvements is going to increase the value up to $110,000. And then the mortgage approval that we would be looking for would be 95% of 110. So that means the mortgage amount is actually $104,500. So on closing, they would get a mortgage for $95,000, and then once the improvements were completed, then the bank would advance the rest of the money. So the difference between $95,000 and $104,500 is $9,500, and that $9,500 would be advanced to the borrower once the work has been done. So in doing the Purchase Plus Improvement Program, the person doesn't have to wait a number of years to do a refinance. They can just do the improvements now as opposed to having to wait. So if you have any questions on that, it's the Purchase Plus Improvement Program, and just give us a call if you have any questions. The number is 905-436-8010. Thanks, and have a great day.